Hey guys, I'm London. In today's video, I'll quickly cover what two stocks I've been buying this week. Now, I do want to note that I'm not a financial advisor. You should not invest off of what you learn on the internet. You should always consult an investment professional, and let's get into it. So, frankly, I've been buying Meta and Constellation Energy this week. Meta has been on a dip, and if you track the Mag 7, if you do a simple Google search, you'll find that Meta is the lowest PE rated ratio out of all of the Mag 7. Now, this is a viable strategy when you go and track the Mag 7. If you look at whichever one has the lowest PE ratio, you can typically gauge that it has a huge upside ahead. Now, PE ratio is price to earnings again. So basically how much of a return you're getting. Now, I have a total of $1,400. I bought about $400 worth this week. Again, 620, it's a huge decline from its 1 month period of 666. And if you look at the highest point, which should be 781 or even 791, that's a huge percentage decrease. That's a huge decrease. Now, this is mainly due to nothing with its earnings, nothing with its financial standing. It's in a great market position because of its Instagram, Facebook, WhatsApp ad revenue, but it's actually been because of its heavy spending into CapEx, capital expenditures, what it's been putting its money into. It's been doubling down on its metaverse, it's been doubling down on its AI, and it's generally just been building out more AI infrastructure. Now, another one of my companies announced earnings this week, Taiwan Semiconductor, and it basically lifted the whole AI ecosystem. Data centers, most tech companies, chip manufacturers, etc. TSMC blew out earnings on a huge margin, and it pretty much lifted investor sentiment around the AI ecosystem. Now, I believe Meta will have a great earnings. I believe it will continue pushing past industry limits with its AI and its ad revenue. And I just believe that this is a pretty strong company that's not really going anywhere anytime soon. It has been on a drop. It will be on a drop for probably the next 2 weeks or so. It will hover around this 650 mark, 620 mark that it's been around. But when it pops, it will pop. Now, covering Constellation Energy, this Meta actually ties into Constellation Energy. We saw here earlier in the week that Meta had a nuclear deal, a three-way nuclear deal with Oklo, Vistra, and Constellation Energy, a three-way billions of dollars invested into their nuclear infrastructure to power Meta's AI systems. Now, the only issue with Meta is that it doesn't have its own cloud, but I believe it'll get there. I believe it doesn't really necessarily need its own cloud. It has a great market cap. It's just a great well-off company. Now, it's not as high risk as something like Tesla. Again, Tesla's profit margins, that's why the P ratio is so high, are kind of futures based. So if it doesn't deliver on what it promises in the future, this stock would dump heavily. Meta's not really like that. I believe it's an elite growth potential machine, but it has lesser downside risk than something as comparable as Tesla. But anyways, back into Constellation Energy, which has became recently a significant portion of my portfolio. I just bought on Friday of yesterday because look at what the share price did. It went from 341 all the way down to 307. I bought that huge dip. Now, it has a high PE ratio for being in the energy sector, but it's just such a stable company because it's pivoting to nuclear energy, which is essentially the future of energy for the whole AI industry. Again, I covered this in a video. I think that in 2026, it will be more love given to surrounding AI sectors. We even have seen that already with data center companies like SanDisk, Western Digital, etc., being lifted by these AI earnings, such as Taiwan Semiconductor, or just good news surrounding the AI/semiconductor trade. This will benefit heavily. We saw that recently with Meta. Meta also invested heavily into what Constellation Energy has. Again, the nuclear energy. Now, it's not just a nuclear company. It has a lot of upsides with it. It's an overall energy company. You need energy. Everyone needs energy. They power the grids. They power homes. They power what I'm doing this research on. It essentially is the backbone of the economy, so to speak. Now, this is a growing company. It has a $124 billion market cap. I'm not really going to get into all of what this company does. It is a new company in my portfolio, but I believe in the long-term aspect of this. Because if you look at the price chart, it's pretty volatile, but it's hit 406 before. Now, obviously, that's about a 33%, somewhere in the 30% upside with what I can get with this company. That's why I bought that huge dip, because we haven't really seen that dip in the company at 309 since a month or two ago, or even a few months back. We haven't really seen that much of a dip with this company. Now, that's really only because Trump announced that he's cracking down on data centers and energy. I believe he's not really going to do this because we need both to stimulate the economy, and with where we're at, both are really needed. But again, a lot of things nowadays in the markets are manipulated, and then I just bought the dip because this has a huge upside. Originally I was down like 10%. I bought the dip. Now I'm only down 0.60. But overall, I've narrowed down my portfolio. I believe in Constellation and Meta as my go-to picks. Obviously, we have Google and TSM. I've already covered them. They're the best companies in here. You have UNH. But Meta and Constellation are on huge discounts, and that's why I'm buying them. Because I believe in the nuclear product that Constellation is pushing out, the energy product. Again, things like that will grow because of the tech boom we're having. Tech requires CapEx into nuclear and energy spending. Meta did that with Constellation already. And Meta has a high upside because of its ad revenue and because of the cash pile it sits on. Similar to Google, Meta has a huge cash pile. The only thing with that's causing this company to go on a discount is the heavy spending into CapEx. Now, if their CEO, Mark Zuckerberg, were to ever halt that or give good guidance towards the future as to why he does that, and investors appeal to it, this could pop above $900. That's just my take on it. They have a great core business model with their ad revenue. Again, over 2 billion active daily users across all their platforms. It's a cash cow. They have their earnings report coming up soon. I'm bullish on that. I believe they will beat that. And they're just overall just a great company. But again, they're pouring heavy into their AI infrastructure, their metaverse, and their AI learning tools. But I do recommend both. I do recommend the value that both are at. I recommend you just at least take a look at them and take a look into what they do. Now, that's all for today's video. I hope you enjoyed this short video today on why I'm investing into Meta and Constellation Energy, and I hope you have a nice rest of your day.